Welcome back. In our top business story, Dubai's flagship airline Emirates is said to plan to issue a $1 billion bond. Brian Jeffrey, Senior Vice President of Corporate Treasury, told a local publication that the airline was considering the new bonds to finance aircraft purchases, given funding challenges faced by European banks. Tapping the bond market instead of pursuing a bank loan is often more attractive for companies also outside the aviation industry, as some European banks are currently struggling with liquidity. However, at the moment, there are no firm plans to release a new bond, Brian Jeffrey added. Yesterday, local reports speculated that Emirates Airline was to spend an estimated $4 billion annually over the next 4 years on its expansion. Meanwhile, surfing on the net while being 10,000 meters up in the air is now possible when flying with Etihad Airways. Abu Dhabi's national carrier announced that it will provide onboard wireless internet on selected routes to Europe before the end of the year. Speaking at the World Broadband Forum in Paris on Wednesday, Etihad CEO James Hogan said that his company will equip 2 of its currently 61 aircrafts with operational onboard internet by December and another 5 by March next year. In the years to come, Etihad wants to make broadband internet access a standard on all flights, Hogan added. It's the last trading day of the third quarter today. Compared to the rest of the world, both Dubai's and Abu Dhabi's stock market performed relatively well. Due to the ongoing European debt crisis and high risk aversion among investors, Dubai's main stock index lost 5.3% in the past 3 months and Abu Dhabi's benchmark 6.3%. In comparison, the MSCI World Index lost 15.5% in Q3. We earlier spoke with David Verghese, fund manager at Emirates MBD Asset Management, why the UAE markets held up so well and how the oil price played into their performance.
Yeah, in terms of the quarter, actually our MENA markets did hold up quite well. MENA overall was down about 7%. Within that, Dubai was down about 5%, Abu Dhabi down about 6%. And really what we did see was quite a bit of defensive posturing within MENA, and a number of the companies within the UAE actually also did quite well for the quarter. Etisalat, as an example, was down about 6%. Aldar was down about 5% for the quarter. And so we didn't really see a lot of downward movement in terms of individual stocks within the UAE. Also with regards to oil was down about 15% in the quarter, but again, the losses in terms of oil in much of MENA was much more limited than what we saw on the emerging market side. Emerging markets for the quarter were down about 22%, and some of the developed markets like Germany and Paris were down 24 to 25%. So I think overall the story is that we held up quite well and we're positioned pretty well for the last quarter of the year.
With that, let's now look at today's stock market performance here in the UAE and the entire Gulf region. In our world business news, the German lower house in Berlin, the Bundestag, today voted in favor of extending the European Rescue Fund, the EFSF, a day after Finland's parliament did the same. Many were anxious whether the bill really would go through. German Chancellor Angela Merkel spent weeks trying to convince dissenters in her coalition to back the July 21st accord by euro area leaders to expand the fund. In the end, lawmakers passed the measure with 523 votes in favor and 85 against. The new bill now allows the EFSF to buy bonds of highly indebted Eurozone countries like Greece and Spain and to offer struggling nations emergency loans. The guarantees Germany provides via the EFSF are the largest in all of Europe, and with the new bill nearly doubled to 211 billion euros from previously 123. That's why German taxpayers' resentment is high.
I think Greece is to blame because they have so few taxes. I think it's good the way it is in Germany. We do have taxes, many taxes, so we have a lot of income as a country and we can afford our infrastructure. But this isn't the case with Greece. I don't understand why we have to pay this.
We have Bruce Powers, Head of Research at Trust Securities, here with us to talk about the bill passing through. Hi, Bruce. How are you?
Linda. Good.
Thanks for coming in. Now, will this really reduce fears that the markets have that Greece will default, you think?
Well, it seems to be calming the markets a little bit. It was somewhat priced in. Initially, we saw a reaction in Europe, which was pretty muted. But later on, the markets recovered a bit, and we saw positive moves across the board. I think investors are now going to be watching what happens in the U.S. We're opening strong in the U.S. If the market could close above yesterday's highs, then that will be a good outlook for Asia and Europe tomorrow.
What do you think the next step has to be for the European governments to solve the debt crisis? Obviously, with this passing of the bill today, it's not over yet, right?
Right. Well, this is certainly a good move in the right direction. It provides a lot more liquidity to the fund and more options on how they're going to use that funding. There's also talk of maybe having the fund issue some bonds, which would give it even more capital to work with, as well as possibly ensuring to some degree buyers of government bonds that are either from private or maybe even the European Central Bank, which would put more liquidity in the market and more demand for some of these government bonds. But there's still a little ways to go, and there's still 7 countries that need to approve this measure before it moves towards implementation. So we still have a little ways to go, and I think it remains to be seen how the markets are going to perceive this development, and hopefully we'll find out more tomorrow.
So it's not the time to sit back and relax as an investor, I can tell.
Yeah.
Thanks for coming in.
Thank you.
Competition among the world's tablet makers is firing up. Amazon takes aim at Apple's leadership with the iPad by introducing the Kindle Fire, a tablet computer with a very competitive $199 price tag. Amazon CEO Jeff Bezos debuted Amazon's eagerly awaited tablet computer Wednesday in New York. The world's largest internet retailer is late to the tablet game. Still, the 7-inch dual-core processor Kindle Fire is expected to shake up the market. It is the price that shocked the most, not $300 as some analysts expected, but $199. Amazon also introduced 2 touchscreen versions of the Kindle, including a 3G model, and it dropped the price on the basic Kindle to $79. Not only are these competitive prices, industry experts say, Amazon is also leading with content and services. For instance, Amazon recently inked a deal with Fox to provide movies and TV shows. That's on top of the millions of titles already available.
Consumers have to approach it with the expectation that this is a device for checking email, looking on the web, and consuming content, playing games, that sort of thing. And if that's the perspective that they bring to it, then they'll be getting a great deal.
Before we go, here's a quick overview of the oil, precious metals and currency markets, and after that we have the day's sports news for you.